waking up without a job this morning after being fired by the Trump administration.
With the breakdown in more life, recession fears are growing on the street.
The egg prices have soared 15% in the latest.
Market plunged on Friday with the S&P 500 having its second worst day of the year, dropping 2.
Finance and business are all inherently uncertain, but there's a point where the risk goes from measurable to toxic.
The stock market is crashing. Billion-dollar companies are bleeding value. And Trump's new tariffs might be making it even worse. How bad can this really get? In just a few days, the US stock market has taken a serious hit. The Dow Jones dropped nearly 1,700 points, and both the S&P 500 and NASDAQ saw major declines, losing 4.8% and 6% respectively. Even the biggest tech companies like Apple, Amazon, Microsoft, and Tesla are feeling the pressure, fueling growing fears of a possible recession.
The chance of recession is higher than most people.
This is 125% tariffs. The next it has 145%. One day the US is heading towards a recession.
The S&P 500 had its biggest one-day drop.
The world teeters on the edge of a potential global recession.
So why is this happening? Well, much of the uncertainty stems from new tariffs announced by former President Trump. He imposed a 10% tariff on all imports and a 34% tariff on Chinese goods. In response, China hit back with even higher taxes on American products. These moves have sparked fears of a trade war, making investors worry about higher costs for businesses and consumers alike. With rising tariffs, slower global trade, and potential economic slowdowns, it's no wonder the market has reacted so negatively. Experts are warning that we might be heading for a recession, a period where businesses struggle, jobs are lost, and money becomes tight. But this isn't the first time. Think back to 2008. Banks collapsed. Families lost their homes. Retirement savings disappeared overnight. The stock market lost $7.4 trillion in value. Jobs vanished. Dreams were buried. People didn't see it coming. But the signs were always there. And now, they are again. So stay with us, because by the end of this video, you'll know how the smartest economists, investors, and billionaires protect their wealth, and how you can do the same during a recession. Before we talk about survival, we need to understand the storm. A recession is like a sudden winter in the middle of summer. Everything seems fine, and then the freeze begins. Orders stop coming in. People stop spending. Banks stop lending. And Joe? He watches his sales drop, his savings evaporate, and his hopes sink. A recession is a significant decline in economic activity, lasting more than a few months. It shows up in GDP, income, employment, industrial production, and sales. Economists say a recession happens when the country's economy shrinks for 6 months straight. But it doesn't just affect big companies. It impacts everyday families. Jobs become harder to find, prices go up, and savings lose value. Now that we know what a recession is, let's look at why experts think one might be coming soon. We need to know the signs, because the next part is not just economics, it's survival. Economists use clues to predict recessions, kind of like how you check the sky for dark clouds before it rains. Two big clues are flashing red right now: the yield curve inversion and the SOM rule. There are two indicators that have predicted nearly every major recession in the last 50 years. Yield curve inversion. Think of it like this. When Joe invests, he expects long-term returns to be higher than short-term ones. That's normal. But when the yield curve inverts, short-term bonds pay more than long-term ones. That means investors don't believe in long-term growth anymore. In every major recession since the 1970s, including 2008, 2001, and 2020, the yield curve inverted months before disaster struck. Today, the 10-year Treasury just dropped below 4%, and the yield curve is deeply inverted. the same warning bell is ringing. The Somm Rule. Economist Claudia Somm developed a simple rule. If unemployment increases by 0.5% or more from its lowest point in the past 12 months, it's a strong sign that a recession is coming. If the lowest unemployment rate in the past 12 months was around 3.5%, then the trigger point for a recession warning would be 4.0%. Right now, we're at 4.1%. Not there yet, but inching closer. It's like smoke before fire. The Somm Rule doesn't blink unless flames are near. In 1990, the Somm Rule hit 5.5%. In 2001, 4.4%. In 2008, it hit 4.9%. Will this be like the 2008 Great Depression? And the truth is, this might be worse. The trade war is escalating. The dollar is weakening. Consumer confidence is falling. Reddit forums are flooded with fear. Elon Musk is stepping back from government duties as Tesla craters. The S&P 500 and NASDAQ are officially in correction territory, down over 10% from their highs. People are whispering the word collapse. And for millions of Americans, it's starting to feel like 2008 all over again. They feel trapped, hopeless, powerless. Germany's factories are slowing. China's exports are shrinking. This isn't a US storm. It's global thunder. But Warren Buffett is holding $134 billion in cash. Why? Because during crashes, cash is king. Cash is king during tough times. Billionaires like Warren Buffett save cash so they can buy valuable assets when prices drop. Start saving now to create your own safety net. It lets you buy when others are selling. It gives you power, freedom, opportunity. Inflation rages at a 40-year high. Interest rates soar like a dragon breathing fire. Jobs vanish. Savings shrink. And everywhere you look, people are whispering one word: recession. Fear is the new normal. But hidden in this chaos is a quest. A journey every great investor must take. And the prize? Not just survival, dominance. But in the darkest hour, a guide appears. A man who's walked through 18 recessions and emerged richer every time. Warren Buffett. His message? The economy is unknowable, but greatness, that's yours to claim. The call isn't to predict the storm. It's to build an ark. This is where most fail. They see monsters, inflation, rate hikes, layoffs, but the hero sees dragons to slay. And the sword? Unshakable rules. Rule 1. Ignore the storm. Master the micro. While others obsess over the economy's big picture, Buffett studies businesses. Does the company dominate its industry? Can it hike prices without losing customers? That's the battlefield. Macro is noise. Micro is your compass. Rule 2. Dollar cost average. The unsung hero. Invest like clockwork. 500 this month. 500 this month. 500 next. When markets crash, you're the quiet hunter, gathering shares on sale. No predictions, no panic, just relentless progress. Rule 3. Time is your kingdom. Short-term traders? They're slaves to today's drama. But you're playing a 20-year game. Stocks aren't tickers. They're cash-generating machines. And time turns compounding into a weapon. Here's the test no one escapes. When the market crashes and Google screams recession, that's your moment. It's the door. Buy when blood is in the streets. Hold when others flee. This is where legends are made. And here's the truth they don't tell you. Recessions aren't curses. They're cleansing fires. Weak companies die. Strong ones emerge stronger. And you're not just rich. You're wise. Because you didn't fight the economy. You transcended it. So here's your choice. Will you cower at the foot of the mountain, paralyzed by predictions? Or will you grab Buffett's playbook and climb? Robert Kiyosaki, author of Rich Dad Poor Dad, says, "Silver is the hottest investment today. It's affordable. It's real. It's a hedge." Robert Kiyosaki recommends investing in silver because it tends to hold its value during economic chaos. Other safe options include gold or stocks in industries like healthcare or utilities, things people always need. No flashy cars, no wild expenses, just focus. If you have loans with high interest rates, try paying them off or switching to fixed rate. Loans where payments won't change even if rates go up. That can keep money coming in even if your main job is affected. Recessions can create chances to buy homes or stocks at lower prices. If you're prepared financially, these could be good investments for your future. If his main gig slowed, he wasn't defenseless. During recessions, knowledge is the highest return asset. But they make the disciplined wealthy. After 2008, the market soared. Those who bought low, who stayed calm, who acted with strategy, they didn't just survive. They thrived. Recessions are tough. They test our patience and resilience. But they also teach us valuable lessons about managing money and preparing for uncertainty. Remember this: storms don't last forever. The economy will recover eventually, just as it did after past recessions like 2008. Or even the Great Depression decades ago. By staying informed and taking smart steps now, you can not only survive, but come out stronger on the other side. Because now you know what they don't. And that changes everything. So don't panic. Plan instead. Use this time to protect yourself and look for opportunities hidden within challenges. Let this moment be your wake-up call. Not a whisper, not a warning, but a declaration that you refuse to be a victim of the next recession, because the future doesn't belong to those who wait. It belongs to those who prepare. You're not just watching a video, you're rewriting your destiny. So stand up, learn more, invest wisely, protect your assets, and take control before it's too late. This is your moment. Don't waste it. If you found value in this, share it with someone who needs to hear it. And stay tuned, because we'll be back with more powerful insights to guide you through the storm. Smash that like button if you're ready to stop fearing recessions and start exploiting them. Subscribe, and I'll see you at the top. Until then, stay sharp, stay safe, stay ahead. Stay ahead.